Well, good evening all. Ira Epstein and I'm returned. I am back. And it is Sunday, the 3rd of November, 2024, and I've gotten myself caught up. I used the whole day today to go through and read news stories. I didn't read any news stories. I didn't look at markets. I had to in the morning for my paid subscribers keep up with existing positions, and I did that. Had them trim where I wanted or do other things, and that was it. If I worked 25 minutes to an hour a day, that would have been excessive. All right, so I really put very little time in because I wanted to put little time in. I wanted to get my brain, you got to wash it out every now and then. I find that if I go away every 8 to 10 weeks for a day or 2 or 3 days, it works. I don't need a week vacation. I go nuts. And on this vacation, my whole thing was 6 days, just so you know. And 2 of them were spent traveling in an airplane to the West Coast and back. So really, it turned out to be 4 days of real vacation. And it was wonderful for me. Drove thousands of miles. I really mean that. We went from LA all the way up near Oregon, back down. It was a trip, had to see family members, my son and my uncle. I've got an elderly uncle. I'm older already, and it was great to see him. All right, so now we have the week of the election. It's upon us. All right, and after this, the post-election gets us into other things. I've done my special reports on it. I've made you know what to expect post-election. It's no secret that I am bullish going into year-end, but the post-election immediately can be an event that's up or down and eventually get a correction before the market, I believe, will take off into year-end. Now, a lot's going to depend, obviously, who wins the election, the immediate reaction to that. Number 2, is it a contested election? Number 3, what's the makeup of Congress going to be? Because I want a split Congress. That's the healthiest thing for the U.S. to have. Make things more difficult, not easy. We have neither candidate that wants to rein in spending. Therefore, somebody has to be level-headed, and I pray it's a split Congress that keeps it controlled. That, to me, would be the thing that we should look forward to. And we'll see what goes on. After that, we get the Fed. So we're going to get into the Fed. They're on Thursday. They normally would release their meeting on Wednesday, but they wanted to give a little distance this time between the meeting and the next meeting. I have now joined in the camp that does expect a 25 basis point cut. And the reason is simple. The employment numbers showed the weakening. Originally, they were very strong, and I said it repeatedly, I don't think the Fed should do anything. But the revisionment of 100,000 jobs that we just saw, along with only adding 12,000 jobs, that's different. And if you look at the amount of respondents to the survey, down dramatically, under 50%. Why, I can't answer you other than could be the hurricane that's got people out there. I don't know. Will there be more revisionments when you get that low of a response? Yep. That's what I think you should expect, and I think they'll do whatever they're going to do. But you got to go. The Fed's got to look at what it has now, and that's it. We've also seen in earnings, a vast majority of it's done now. And they came out better than the market gave it credit for. So the market on its own, I think it's okay, all right? I think the market held up to a reasonable degree. We're getting corrections where they should have hit. You know, the bonds and the notes, they were weak as can be, you know that, because rates have actually gone up. As we look at NVIDIA, you know, it's near an all-time high. It didn't do bad at all. The gold market is held just beautifully. I mean, just absolutely beautifully. The miner's not as good, nowhere near as good as that. In terms of news, well, what we've had, and by the way, I'll talk to you about my complete research in just a minute here. That'll be at the end of this, but I wanted to get right here. We're going to get factory order data for tomorrow. People will give it 15 seconds worth of importance, and that's where it'll go away. That's my opinion. We had the Baker Hughes rig count, and they're basically unchanged when you look at everything. We had OPEC today come out with a statement on the website that they are not going ahead with the 180,000 barrels that have been planned. The IEA continues to say that OPEC's numbers, they don't say OPEC, but they give their numbers, and they have been the better, much better analysts on this as to what oil's doing than OPEC themselves. And the fact that OPEC's now twice in a row had to say they're not going to produce as much fits in very much with the OPEC demand, not the OPEC, with the demand of oil that IEA has been seeing. So do I think oil's going to collapse? Absolutely not. But I do think that OPEC's lost control of the market because non-OPEC members have been producing like there's no tomorrow. Just look at U.S. production if you don't believe in what I'm saying. Then we had the situation with Israel and Iran where things have simmered down. So the war premium had to come out, which it did. Now Iran's again talking up they're going to attack and so on. It sounds great. I don't think it happens in the way they want. Israel proved it can get through the air defense systems, which opens up a lot of targets if that's what they want to do. In addition, who's going to be president? What's the pressure on Israel? Harris or Trump? I don't know, do you? So this is what you've got to deal with. So please just understand and be very, very careful about the markets. As I said, on my complete research, I cover my thoughts on all this. I'll cover the market reactions. I'll give you ideas as to what I see. My complete research covers primarily the futures markets. You want to tie that together with the Morning Spider ETF. When you do that, because think about it, SPY, DIA, QQQ, they're all futures. What do you think TLT is? What do you think USO is? It's how the futures are doing. I can go on and on and on. It's not everything like that, but I tie it together. And I think you'll find that works, and I don't limit it to that. I will talk consumer disposable income. I will talk all these other items in there. And I write a report that is meant to be read in under 3 minutes. A lot of graphs, bullet points, drive home points for you that I'm finding. If I give quotes from other services, I'm always certain to try to mention them, give them the credit. I don't want to plagiarize, and I don't. And I read like a madman, and I point you in directions. Many times I point you to their articles. You just go to iraepstein.com, and on the website, go to research. You can move your cursor up to the top here at any point, and you can get in that way as well. All righty. So let's go to the chart action and see what we've got. I wanted to cover, instead of DWCP, another one of the funds that replicates as close as possible the performance of an equal weighted S&P. Now, I've covered it normally, as you know, during the week for you, and I've made it a regular. But I thought it was worth highlighting it now as we get into this all-important week. The trend of the market on the swing line, and that's what this is, you have higher lows, higher highs. Or do you? I'm going to come back here. This 176.25 took out the 176.42. So you actually have left that bullish pattern. And I show that to you here. Now you've got a lower low and a higher high. For the moment, you've stepped out of the uptrend in terms of the classic pattern of higher highs and higher lows. Number two, the market has backed away from the upper band right through here. It's backed off a little bit through that. The upper Bollinger Band, 95% of the time on a black band here or the black one there, you will settle within those bands, 5% of the time outside of it. Now you want to keep your eye on the red line here, which is closed at 79.91. If this market opens steady on Monday, what will happen is that number is probably going to go under 79. At the end of the week, if it's under 79, the odds strongly favor that that signals price, and now this could happen Monday through Thursday as it gets under it and keeps staying under it. If that happens, price in the 18-week average of closes will most likely make a run at each other and hit each other if it can stay down like that. On Amazon, on a weekly basis, this has been a powerful chart. It's much better than the daily chart has been. It is overbought. I would think it's going to have trouble up here at 202.72, the upper Bollinger Band, but the holiday season's right in front of you. This is your biggest retailer, along with the Walmarts, the Costco's, but this is your biggest online retailer. I'm of the opinion you want to be looking at that very hard. When you look at China, now this is the week where we start finding out what they're going to do. Remember, they've put money aside. They did from the People's Bank and from their Planning Commission how they're going to allocate money, how much it's going to be. Now they have to deploy that. And over the next 4 days, that's what these committees now get together and do. So we will hear just how much they're going to support property, how they're going to get people to buy more property. We've heard they're lowering mortgages and so on, blah, blah. How the local regions, the big cities there, and we call them counties or states in the U.S., but they're regions, how are they going to be able to float, if you will, bonds and note issue and get money back in so they can pay their bills and do whatever? Because when the property market fell apart, their source of revenue fell apart in many of these areas. We're going to find all this out. This is when fiscal policy meets monetary policy. There's a difference between the two, and it's going to affect the same way. Almost these charts, if you look at them, don't they look very similar, these two? They're not identical, but they certainly look a lot in common here. We're going to find out what they mean. They could easily both fall back to their 18-day average of closes. The market's going to respond to the words. Restoration Hardware made a new high off the whole move since we've been covering it. It's acting like it wants to correct a bit. If it does so, you might go back to this 294.46 to the 100-week average of 283.16. Overbought market now. In the Meta, one of the best performers that we've seen. It's just been consistent, build a nice base out of here. It could fall back. I'm ready for the stock market to slip back. I'm not saying it has to. None of these are short sales. They are markets that can pull back into the big support of the 18-week average of closes. When you look at KRE, well, it's run up because interest rates climbed. Now, will they keep climbing into this Fed move? I don't think so. If you go back on your charts and you look at the September meeting of the Fed, you peaked out after the Fed in futures contracts. You peaked, which means interest rates started to climb right around September 20th, and they did so. This is the inverse. As the rates climbed, the banks were able to make more money, and they went up. Lending, especially regional banks, how they go about their loan. Well, yeah, John, you can get a loan. We want to charge you. It's going to run you about 10%. And, of course, the bank's sitting there, and maybe you can make a spread of 4 or 5% for the risk they're taking. But if that narrows in, they make a bit less money. Higher lows, higher highs. And, by the way, that commercial real estate has helped them because it's not quite the disaster because there was so much planning. So much writing down of the property value. And those that have been taken, well, they're going at basically land value in some cases. But as you look how the market's coming down here, okay, are we going to lose the embedded reading? We could. I don't be a hero. This is not the 48-hour period to be a hero in the market. XLE, lower low, higher high, just staying basically sideways between the lower Bollinger Band and the upper, void of a trend. I don't see a trend in that market. The dollar's been on a tear to the upside, but when you get to the upper band, only 5% of the time do you stay over it. I'd be very careful right here, exceptionally careful. All right, this market could run if it gets crazy in America. People want the safety. What if Trump claims he won again and blah, blah, blah? I don't know what this all means. What if he didn't win? But he says he won. He already came out and said he should have never abandoned the White House. To me, it's a little crazy. You lose the election, you get out of the White House. As we take a look at GLD, now this was a trade for the week that I have clients in this, all right, via my recommendations, and I've cut their positions down, but I don't think you give up your gold holding in GLD. Futures are different. And the reason is the leverage. You got to be careful. You can give back everything you made in lickety split. It's much harder in this type of market. The leverage is only 50%, remember that. And I'm not talking triple inverse and double inverse funds if they're out there. I'm talking for the normal that we trade and look at here. Higher lows, higher highs, right back and sitting in copper. Why? Well, copper's waiting on China. This is where the whole thing takes place. So for my money, that's what you start looking at. So as I look at this all, I want to remind you to complete research. Go to iraepstein.com, can't make it easier, or move your cursor to the top here. You'll see an icon. Give it a click, and away you go. I'll catch up with you in the morning. Good to be back. Take care.